there are two things that people really like. We all know there are $45 trillion of baby boomer wealth sitting in the registered investment advisors. That's a giant amount of wealth. It's the single richest age group in the history of the planet. And they're going to die. Just like Charlie Munger passed away, God rest his soul, and that money is going to younger people, and younger people like crypto. So as we see this generational shift of wealth, it is shifting into a group that is really happy with digital assets, that is comfortable with digital assets, that likes, that they think this is their asset class. And so that's the one thing. And the second is we have a government that can't keep its pants on. Like we have a government that can't stop spending money. On the left and on the right, Congress is failing us as citizens. They're spending too much. And that is the narrative for why Bitcoin goes higher. The same narrative for gold and silver is the narrative for Bitcoin. That's not going away.
Wait a minute, everyone. We all agree that the crypto market never sleeps, but with countless newsletters out there, how do you choose the best one for you? Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge. In today's video, Michael Novogratz, the former Goldman Sachs partner, founded the equivalent financial services powerhouse for digital assets. Hear how he thinks crypto can retain its maverick spirit now that his old colleagues have joined the party.
What is shocking to talk about how strong crypto is right now. At the beginning of the year, we thought the market, not just we, thought 5 Fed cuts this year, maybe 7. And now we've gotten 0, and it doesn't look like we're getting any until maybe September, and if we get them, we're going to get 1 this year. And crypto's at the highs. Think of where it would have been if the Fed was cutting rates, right? Why is that happening? Why are equities happening when rates are staying high? The federal government is spending 6.5% more of GDP than a balanced budget would have at a time when we've got full employment, right? We are running the most profligate fiscal policy that we have run since I was born. And it's been normalized. Donald Trump normalized it. Joe Biden has normalized it. They have been the 2 presidents that have done more to wreck the finances of your children and grandchildren than any presidents in the history of this country. And the crypto market understands that. Why Bitcoin is a great long-term asset is because we're in an environment when we have a populist president running on the right and a populist president running on the left. And populist presidents don't like to tighten their belts. Joe Biden wants to forgive more student loans, right? I was talking to a Democratic senator today who's on the Armed Services Committee. He said, I don't care who wins. We need to spend so much on the military in the next 10 years to combat the threat from China and Russia and the new advancements in AI and fighting, that just the increased military spending is incredible. Where are we going to get all this money? We're going to keep printing it and printing it. Those deficits aren't going away. And that really is why you should sleep like a baby owning your Bitcoin. Have a little bit of gold and silver as well.
Bitcoin is still largely profitable despite months of sideways BTC price action, says new research. Bitcoin may be trading within a rigid corridor, but the majority of hodlers are not seeing a return on investment evaporate as a result. Summarizing current BTC price behavior as establishing equilibrium, Glassnode pointed to multiple on-chain metrics showing Bitcoin in a period of consolidation, not capitulation. Sideways price movement tends to manifest as investor boredom and apathy, which appears to be the dominant response across all Bitcoin markets. It wrote, BTC prices are consolidating within a well-established trade range. Investors remain in a generally favorable position, with over 87% of the circulating supply held in profit, with a cost basis below the spot price. Using the market value to realized value metric, Researchers show that on aggregate, a given amount of BTC is still up by more than 2 times, or 120%, versus its purchase price in United States dollar terms. The one-year average value of MVRV is currently 86%. The MVRV ratio remains above its yearly baseline, suggesting that the macro uptrend remains intact, accompanying commentary added. Among the most important lines in the sand now on the radar is the aggregate purchase price for Bitcoin's speculative investor base, the so-called short-term holders. The latest data from Statistics Resource, Look Into Bitcoin, puts the ST8 cost basis at $64,000. Despite seeing unrealized gains fading, CA entities themselves are not preparing for a mass sell-off at current prices, Glassnode states. At present, short-term holders are sending around plus 17.4 BTC/day to exchanges, it calculated. However, this is markedly lower than the peak of plus 55 BTC/day recorded as the market hit the $73,000 ATH in March, where speculation levels were becoming excessive.
Listen, the two biggest things that will shift the landscape in the U.S. around crypto is this accounting rule being passed or being overturned and the market infrastructure bill, right? What does the accounting rule do? It allows Bank of New York and State Street, the world's biggest custodians, to start custodying crypto. And the market structure bill, not good for me because the day after it passes, Citibank's going to be calling the headhunters to call for my employees. But what has stopped Wall Street at large from being a participant in the digital markets is regulatory uncertainty. It's the fear that the Fed is going to call and say, no, you can't do that. The fear the SEC is going to be down their throat. The fear that they're going to get a Wells notice, just like almost all the crypto companies. And so as that goes away, you will see a stampede of Goldman Sachs and Morgan Stanley and Citibank and Jefferies and everybody else into this space. I'm hoping, in some ways, I hope it gets delayed a little bit, allows guys like us to build our muscles a little stronger, because that's really when the big show happens on who's going to be the service providers to the universe that comes in. And so, yeah, the first movers are wealth management clients who said, I want some of this. And just so you know, places like Morgan Stanley, they need that ETF to season for a little more than 3 months before their salesmen are even allowed to pick up the phone and call and say, hey, guy in the white hat in the front row, I think you should put 2% of your portfolio into Bitcoin. Yeah. And remember, people don't just buy Bitcoin, they get orange pilled. Bitcoin is sold, right? There's an army, all of you are part of it, that convince someone of the merits of crypto, of Bitcoin or Ethereum or Ripple if you're Brad Garlinghouse, right? This is a really interesting point. Because it's a new asset, it almost is always sold, right? Larry Fink got orange pilled. He didn't wake up one day and say, God, let me become a Bitcoin firm. There was a concerted effort by 10, 12 people to convince them of why Bitcoin was important for the future. And so now you've got hundreds of salesmen at Morgan Stanley and the other, RIAs all around America who are learning the story themselves and picking up the phone and telling their clients, put 2% of your portfolio. What are you scared of, right? That conversation is starting to happen. This is a 10-year conversation, not a 10-week conversation. You get a yield by staking your ETH. And so, you'd rather get a yield than not get a yield, right? A bunch of you probably have cash dollars in your pocket. Raise your hand if you've got any cash money in your pocket, right? That's earning 0%. If that money was in the bank, it'd be earning 5%. And so you're making a non-economic decision to carry something for liquidity. When you stake your ETH, you tie it up for a while. And so there is some cost to the illiquidity. And I will stake my ETH, but there'll be plenty of people just to get the exposure that will participate in the ETF. I would argue that within 12 to 24 months after the ETH ETFs without staking happen, they will change the rules and allow staking. I would think this has started a trend. And the big token ecosystem, Solana, now being kind of the buzz of the last year, right? Ever since, the FTX estate disposed of it all, right? It's got unbelievable buzz and unbelievable growth. My guess is that's going to be the next one that does an ETF. And yes, because it's the same process. How do you take this community and widen it, right? The ETF is hitting new players that weren't buying Bitcoin and weren't buying Ethereum. And so these ecosystems are about building community. And so if you can widen your community, of course you're going to.
The United States Securities and Exchange Commission is dropping its investigation into whether Ethereum is a security. The Enforcement Division of the SEC has notified us that it is closing its investigation into Ethereum 2.0. Ethereum developer Consensus said in a June 19 X post. This means that the SEC will not bring charges alleging that sales of Ethereum are securities transactions, which the firm hailed as a major win for Ethereum developers, technology providers, and industry participants. Consensus said the SEC's decision came after it sent a letter to the agency on June 7 asking if it would end its investigation into Ethereum, as the regulator approved spot Ethereum exchange-traded funds in May, which the firm said are premised on Ethereum being a commodity. Consensus senior counsel, Laura Brucover, shared the SEC's response letter to the firm, which states that the agency does not intend to recommend an enforcement action. The SEC did not immediately respond to a request for comment. In March, Fortune reported the SEC issued subpoenas to multiple companies, which was related to attempts to label Ethereum as a security. Consensus sued the SEC in April shortly after receiving a Wells notice from the agency warning it that its MetaMask crypto wallet may have violated securities laws. The lawsuit claimed the SEC and its chair, Gary Gensler, believed Ethereum was a security since at least early 2023. Consensus claimed SEC Division of Enforcement Director Gerber Gruwal approved a formal order of investigation into Ethereum's status as a security on March 28, 2023. In its latest post, it said the lawsuit is still ongoing. And do not forget to subscribe to Bitcoin Seller. The most important news will reach your inbox on a daily basis and for free. I do not know why you have not subscribed yet. If you like the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.